Hey, good morning. Welcome to the morning brief. Today is Thursday, June 29th. So we did have some 8:30 numbers that just came out. We had final GDP quarter on quarter, which was better than expected, 1.4% versus 2%. So that is, very good for the economy, very bad for interest rates. We'll talk about that in a second. Final GDP price index was slightly less, which is also a good thing. 4.2 versus 4.1, and unemployment claims were less than expected. Also, very, very bullish. So, let's talk about this. What does this mean? It means that even though the Fed is stomping on the brakes with interest rate hikes, the economy is still cruising along, cranking out. GDP's expected to be up. All unemployment claims are down. The labor market is super strong. The next thing we have is at 10 a.m., which is pending home sales, which is a medium impact item, and natural gas storage at 10:30. And that is it for the day. However, we got to think about this. This basically means that the Fed will be raising rates again in July and possibly in August as well. And I think that once the market goes, hey, eventually high interest rates will filter down through the economy. It hasn't happened yet. I'm not sure why there's such a big lag, but there is a big lag. And once the market goes, we're going to have a big correction once they realize interest rates are going to continue to go up for an extended period, as well as for a longer amount of time. So while on the surface this looks like great news, it may not be so good news for the economy or for the markets for that matter. Good for the economy, just not good for the market. Let's look at the daily. As you can see, these are the lines I've drawn yesterday. Potential M pattern, again, very potential, looking way out. But this is another attempt to try to show you how a trader thinks. They're constantly looking at what the pattern could be. Had an update. Actually, that should be, yeah, it was a slightly down day yesterday, but it does look like that is the pattern. So is what it is. Where could it go today? I think we could easily, on an expansion day, go up to 44.57. Downside, possibly 43.86 area. Maybe if we really got some excitement going on, we might go down and test those lows again at 43.66. Looking at the inventory. So inventory is really, so yesterday we had this huge, day before yesterday, we had this huge run up and inventory only 2,700. So we were correlated, but not to the same magnitude. Today, or yesterday, we had the market's up very, very slightly at the 4 o'clock time, but inventory was actually down. So these two things together make me feel like we are possibly getting into a sideways period where we may go sideways, because it seems fairly apparent that even though price continues to go up, there's not nearly as many people excited about getting in. So again, that's just an observation, is what it is. Intraday, looking at the intraday chart here, where's support and resistance? We've got some resistance at 44.41, a little bit more at 44.58, and the third level there is 44.75. So support is at 44.07, right? Just under the 4,400. 43.99, a little bit at 43.83, and maybe even more at, let's say that's 72, 43.72. We go even a little bit further down, there's more support at 50, 43.50. So there is decent support levels below, and actually we have some decent resistance levels above. So that is it. Remember the Stock Traders Almanac. Man, I almost forgot that. 61.9%. So positive expectation, 61.9 for the Stock Traders Almanac. That gives us about 11.9 above the 50-50 mark. So a positive bias is what it is. Remember to subscribe, like, and comment. Have a great day. See you tomorrow. Hey, thanks for watching the Morning Brief. Check out my website for more information, oneononetrading.com. Take a look at the Troy levels, a trade location finder for the futures markets. Help you find those levels of support and resistance that are just so hard to find. I also do personal coaching and mentorships. So go ahead and take a look at my website, oneononetrading.com. Thanks.